All right, so this trade that we've just taken, minus 90 ticks, $490 down. Daily time frame, extremely bullish. We're anticipating a rebreak at highs at 4588. 4-hour time frame open up, no top wick. That is completely fine. So your higher time frame is under the understanding that price action is very bullish, so you're waiting for the bottom wick to be formed. This did not go completely to plan. Why? It's based off the 30 time frame. So first off, the 1 hour is still validated. You're expecting a minimum wick fill towards, or at least an attempt of the flip at 4580. That's completely fine. That's also the 4-hour flip. You want to utilize that momentum. However, look at what the 30's done. 30 has actually given you an indication. Price action hasn't given you bullish confirmation. I forgot about that. So we didn't pay too much attention. That's what led to the 15 giving you this closure, but then came up for a top wick before giving a retest of the lows, which indicates price action will probably come back down to retest the lows, which it has done. And again, that's purely my fault for entering a trade position that I was not fully validated in because of the 30 time frame. I completely forgot about the 30. I was very fixated on the 4-hour and the 1 hour. But either way, coming out of this trade, we know that we are not in full validity. So as I went back through the trade after we rebreak the lows, I was wondering why did price action do that? But we already understood when we entered the trade position, this kind of structure wasn't very likely to continue a breakout above. He would require more liquidity. And then as we started to form that bias, we understood that the 15 open, top wick first, didn't really quite cut it. That's why I moved my risk off area to adapt towards this break of the high on the lower time frame. So as you re-break the high, you can have structure to start pushing you up. And I was hoping that would have been broken before price action re-breaks its low, but unfortunately that did not happen. So for me, we came out with a full stops hit at a minus 90, minus $490. It was still a 2.26 risk to reward. We thought we were validated, unfortunately not. 30-minute time frame still needs a confirmation, which are giving me a closure below the range currently. But yeah, that's how we're starting the week in Malaysia. But it is what it is. In terms of my Holoprime account details, if we just go over that right now, price, if we just give this a refresh, you can see that inactivity cooldown countdown was at 2, so now we've reset that. We're in the drawdown, we're back to 50%. That's completely fine. Look, you're going to take losses. We understand that this was not a validated trade position, therefore this is validated for me to just say, look, well deserved, because I didn't see this coming. Now look at the 30 and the 15. So you're giving us closures like this. You're most likely going to get what you want now. You start pushing up, you're re-breaking the highs here, but I'd require something to occur, like a bottom wick, so we can place the stops. If you re-break those highs, sure, you're likely to pop up, but now the problem is your 30 doesn't have a bottom wick. Your 1 hour can most definitely retest those lows. And that's going to cause a potential issue for me, especially with the risk to reward ratio. So 1-to-1, I'm not interested in that. I need a 1-to-2 minimum. So we'll wait and see. If we get rebreak of the highs actually here, that makes a lot of sense to take. That is almost a 1-to-2. That makes some sense. And we can re-evaluate for that. But the breakdown was for the previous trade. We were not validated in that trade position. And yeah, start the week with a minus 90.